Today we're diving into one of the key concepts in the world of investing. What exactly is an issuer? You hear this word in almost every finance video, but what does it really mean in practice? And why does your profit or your loss depend so much on the issuer? In this video, you'll learn who's allowed to issue stocks and bonds, why companies and governments do it, and what hidden risks can come with each issue. Stick around to the end to learn how not to lose money on securities, and how to spot a sketchy issuer before it's too late. And don't forget to like and subscribe. An issuer is the one who puts securities into circulation. Think of them like a conductor leading an orchestra. They set the tone for the entire financial process. You can't have an investment market without them. Governments issue bonds, companies issue stocks and corporate bonds. But the issuer isn't just the source. It's a whole system with its own rules, duties, and checks. The main goal of an issuer is to raise capital. The money they get from investors helps them grow their business, launch new projects, or even cover a budget deficit. In return, investors get securities that can generate income through coupons, dividends, or price appreciation. So, who can be an issuer? It could be a government, a corporation, a bank, or even a local municipality. It all depends on the scale and the purpose. Governments usually issue bonds to fund big infrastructure projects or patch holes in the budget. Corporations issue shares and bonds to expand and invest. Banks might issue certificates of deposit, promissory notes, or even payment instruments like cards. Join our Telegram channel where we post updates on new videos and articles. You'll find the link in the description or in the first comment. Why issue securities in the first place? Because it's a more flexible and accessible way to raise money compared to loans. You don't have to put up collateral, and you don't always have to pay interest right away. Most importantly, it gives access to hundreds of thousands of investors worldwide. But you can't just walk onto the market. To become an issuer, you need to go through listing, which means getting approved by the stock exchange. It's like going through a tough audition. You have to disclose everything about yourself, show your financial reports, and name your beneficiaries, the real owners behind the business. Only transparent and honest companies get a spot on the exchange. The prospectus is the core document. Without it, there's no issuance. It includes information on the company's financial health, ownership structure, background, purpose of the issue, and all related risks. It's basically the issuer's passport, and every investor has the right to read it. Special attention goes to the beneficiaries. Who's behind the company? That matters because even the most solid-looking numbers can hide shady owners. That's why regulators demand full disclosure on this front. And that's still not all. An independent audit is a must. The issuer has to hire a certified audit firm to go over the reports and confirm that everything adds up. Without this, the securities won't get listed. It's not just about avoiding mistakes, it's a safeguard against outright fraud. The next step, credit rating agencies. They assign a credit rating, an assessment of how reliable the issuer is. Ratings go from AA, the best, all the way down to D, default. The higher the rating, the lower the risk for investors. These ratings are based on income, debt, the economic environment, and many other factors. But remember, a rating is not a guarantee. Agencies can get it wrong. That's why it's important not to blindly trust the letters, but to understand what they're based on. That'll help you make smart investment decisions and steer clear of traps. Credit ratings vary. The top tier is A. Only the most reliable issuers get it. Then comes AA, A, BBB, and so on. If it drops below that, like BB or B, it signals increased risk. A D rating means the company or country has already defaulted. They failed to meet their obligations. So why should investors care about an issuer's rating? Simple. It affects the chances of getting your money back. A credit rating is like a traffic light. Green, go ahead. Yellow, think twice. Red, stop. And ratings aren't just for companies. Countries can be issuers too. Governments issue bonds as well. And investors all over the world pay close attention to their credit ratings. Because a government default can shake the global economy, when a country's rating drops, it affects all of its securities. Investors sell off bonds, prices fall, yields rise, and with them, the risks. That's why seasoned investors closely follow news and rating forecasts. By the way, we've got a new article up on our website. It's packed with free content on stocks, bonds, and ETFs, from beginner to advanced level. Check it out and don't forget to bookmark the site. What risks do investors face when buying an issuer's securities? First, credit risk. The company or country might not hold up their end of the deal. Second, the risk of misinformation. If the issuer hides critical details, you could lose everything. Third, regulatory risk, like when the government changes rules or tax policies. And of course, market risk. The value of securities can change due to external events. To stay safe, investors need to do their homework, read reports, check ratings, stay updated on the news. The more you know, the fewer the surprises. Issuers come in all shapes and sizes: governments, corporations, banks, municipalities. Each has different goals, risks, and types of securities. But they all follow the same logic: raise money through the market by offering investors something profitable, and above all, trustworthy. To wrap up, an issuer isn't just some textbook term. It's a real player on the market who can make or break your investment success. Understanding their role, duties, and how they operate, that's your first step toward financial literacy, safety, and solid returns. Like the video and subscribe to the channel. If you want to support our work, check out our membership page, links in the description or pinned comment.